大家好，欢迎来到 YouTube 大佬透镜，我们用一张 PPT 讲透大佬的深度分析。今天是2026年1月15日。今天我们来分享在纽约时报的 Dealbook 峰会上，知名财经记者 Andrew Sorkin 对贝莱德的拉里芬克和 Coinbase 的布莱恩.阿姆斯特朗的访谈，主要是关于加密货币的。我们先看拉里芬克的观点。比特币是恐惧资产而非增长性资产，市场对金融资产贬值、财政赤字、主权信用、地缘政治不稳定的恐惧，将比特币视为保险或对冲工具而非交易标的。若作为交易工具，绝大多数投资者并不具备择时能力。所谓择时，就是买卖时点的选择啊。大佬透镜认为，实际上对于任何资产，大部分投资者都没有择时能力。波动性来源，比特币的主要问题不是基本面值不值的问题，而是市场仍被高杠杆参与者主导。代币化是金融体系的结构性革命，传统金融体系存在大量中介、结算延迟、摩擦成本，本质上是模拟时代的架构。这个我想无论在哪里生活的朋友深有感触啊。美国的挑战，拉里芬克认为，在金融数字化和代币化上已明显落后于印度和巴西，即使存在泡沫与失败，也必须持续加速投入，否则会被他国在技术和制度层面超越。公司治理与投票权，代币化将终结代理问题，可以实现即时识别真实资产的所有人。未来投票权将直接回到最终持有人，而非集中于大型资管机构。拉里芬克说的代理问题，就是经济学中的委托代理问题啊。当然，他特指金融业中的投资人和资管机构这种信息不对称。就业的结构性挑战，技术驱动的 K 型经济正在加速。当前就业疲软更深层的原因来自技术替代劳动。高等教育体系仍建立在白领需求长期扩张的旧假设之上。这句话怎么理解呢？就以前的假设是，只要接受更多大学教育，社会就会持续产生更多白领岗位来吸纳这些人。现在这个假设可能已经无效了。我的观众里面，无论是为了你自己，还是你正在上学的小孩，这个问题都值得深思。我们再看 Coinbase 阿姆斯特朗的观点，比特币是数字黄金，其价值不会归零，代际认知差异是关键变量。巴菲特芒格的否定源于其成长于美元绝对主导的时代背景。杠杆风险核心不在美国，而在离岸市场。大规模杠杆清算事件主要发生在海外交易所。银行利益，银行对稳定币的抵触本质是为了保护传统业务的利润。稳定币会迫使银行提高存款利率，改善客户回报，最终胜出者是主动拥抱技术的银行。非常深刻啊！我们以前在一期视频中聊过，稳定币会打掉金融机构很多中介业务的饭碗。加密监管，2025年是加密监管从灰色到明区的拐点。稳定币立法，也就是天才法案已经通过，系统性风险显著下降。对宏观与市场的态度长期乐观，忽略短期噪音。它应该是指过去1-2个月比特币的下跌啊。加密预测市场稳定币正在降低经济系统摩擦。预测市场很有趣啊，有兴趣的朋友可以深度研究一下，时间关系我们就不展开了。好，那这次我们就聊这么多，接下来是一段播客风格的解读版本，以及配中文字幕的原视频。这里是 YouTube 大佬透镜，我们致力于过滤垃圾信息，挖掘优质内容，欢迎订阅、转发、常来。
欢迎收听，今天我们来深入聊一份很有意思的材料。这是一场对话的记录，对话的两个人可以说代表了金融世界的两个极端。
没错。
一边是贝莱德集团的 CEO 拉里芬克，他掌管着一个超过10万亿美元的传统资本帝国，
一个庞然大物。
对，另一边呢是 Coinbase 的 CEO 布莱恩.阿姆斯特朗，加密货币世界的拓荒者。
没错，这感觉就好像是怎么说呢？让罗马帝国的皇帝和一个带着新信仰的传教士坐下来聊天。
哈哈，这个比喻有意思。我们的任务就是为你剖析这场对话里那些真正有价值的火花。当旧世界的守护者和新世界的颠覆者，他们终于坐到了一起，到底聊了些什么？是冲突还是和解？这背后又藏着哪些关于未来金融格局的线索？
好，那我们就从最戏剧性的一点开始吧。拉里芬克的态度。
这个确实是，
这简直是个180度的大转弯。你还记得吗？就在几年前2017年的时候，他还公开说比特币是洗钱和盗贼的指数。
对，我记得这个新闻，当时说的特别狠。
结果现在呢， 他掌管的贝莱德发行了全世界最大的比特币 ETF 之一。
这中间到底发生了什么？他总不能是突然被点化了吧？
哈哈，点化这个词用得好。芬克自己给出的解释是，疫情那段期间嘛，他不是不用满世界飞了，
对，有了大块时间。
对，所以他就做了一件很有意思的事，主动去找那些加密货币的铁杆信徒聊天儿。
哦，去听反方意见。
就是这个意思。他说他的目的很直接，就是想挑战一下自己根深蒂固的偏见。他自己也承认，这个过程让他的看法发生了巨大的转变。这个不只是一个人的想法变了，这几乎是整个华尔街心态转变的缩影。从一开始的鄙视和排斥，到现在，怎么说呢？有点打不过就加入的意思。
但这听起来，阿姆斯特朗那边可能不完全同意。他把这种现象叫做典型的创新者困境。
创新者困境。
他说，他在跟这些华尔街大公司打交道的时候，发现一个特别分裂的现象。
怎么个分裂法？
一边是这些公司的创新部门，天天跑来找 Coinbase 谈合作，拥抱新技术。另一边呢，是他们自己的游说团队，在华盛顿花大钱，想尽办法要扼杀这些创新，目的就是为了保护自己那套躺着赚钱的旧业务。这听起来有点精神分裂呀。
这恰恰是大公司最真实的写照，一边踩油门，一边踩刹车。
说得太对了。
而且对话里还提到了一个更尖锐的观点，就是来自沃伦·巴菲特这些老一辈投资大佬的。巴菲特不说过吗？比特币就是老鼠药，迟早要归零。
对对对，这个说法很有名
啊。阿姆斯特朗的回应很直接，他说比特币归零的可能性几乎为零。他觉得这根本就是代沟问题。
代沟？
对，巴菲特那一代人，他们成长在一个美元就是天，美国就是全世界的时代。他们的世界观里很难容下一个去中心化的、基于互联网的新金融体系。但在阿姆斯特朗看来，当全世界的政府都在疯狂印钱、背负巨额赤字的时候，人们自然会去寻找一种新的数字黄金来避险。
这就触及到一个核心问题了：比特币到底是个什么东西？到今天大家还在吵，但芬克的视角，我觉得完全跳出了技术层面。他说，贝莱德管理的这10几万亿美元，本质上是在管理希望。
管理希望？
你想想，你愿意把钱投30年，不就是因为你对未来有希望，相信经济会增长，公司会盈利吗？
有道理。
但他说，比特币恰恰相反，是一种恐惧的资产。这个说法太有意思了。
恐惧的资产，这个恐惧到底指什么？
芬克解释得很清楚。短期来看，人们害怕人身安全，害怕战争；长期来看，人们害怕金融稳定被破坏。但最根本的长期的恐惧是害怕自己手里的钱因为政府无休止的赤字和印钞而变得越来越不值钱。
我明白了。所以你会发现一个有趣的现象，比特币的价格波动经常和地缘政治的紧张局势挂钩。
没错。比如一传出俄乌可能和谈的消息，比特币价格就应声下跌，它就像一个全球焦虑情绪的晴雨表。所以这完全颠覆了我们思考比特币的方式。我们总是在争论它是不是货币，是不是资产，但芬克的角度是，它根本就是一种情绪的度量衡，是你投资组合里所有乐观情绪的反义词，
一种对冲。
对。这么一看，你就不会天天盯着它的价格上蹿下跳了，因为它扮演的角色根本就不是让你今天买明天卖的股票，而更像是一份保险。
没错，把它看作是你所有希望的对冲工具。但芬克也马上指出了这个保险的风险所在，
高波动性。
对，他提醒大家，比特币市场之所以波动这么大，一个重要原因就是里面有太多高杠杆的玩家。阿姆斯特朗也承认，这些高风险的杠杆行为主要发生在那些监管模糊的海外交易所。
所以他的意思是
这就恰恰引出了他的核心论点：赌是赌不住的，唯一的办法就是疏导，在美国建立明确的监管规则，把这个行业从灰色地带拉到阳光下，才能真正的把这些高风险的赌徒给清理出去，保护普通投资者。
说到规则，那就不只是技术问题了，马上就变成了政治问题。而且从你分享的资料来看，这背后的水可深了。
是啊，
2024年这个选举周期，加密行业为了游说， 砸了差不多1.3亿美元，
一个巨大的数字。
其中 Coinbase 一家就贡献了5000万，这就不能不让人问一句，这个行业所谓的新机遇，到底有多少是靠技术创新得来的，又有多少是真金白银买来的？
这个问题非常尖锐，对话里也直接抛给了阿姆斯特朗。
他怎么说？
他的辩护是，他们的目标是增加世界上的经济自由。他说，美国有5200万加密货币用户，这些人不是投机者，他们需要明确的规则来保护自己的财产，所以他们花钱支持那些对加密货币友好的候选人，本质上是在帮助这5200万选民发出自己的声音。用他的原话说，这是民主在起作用。
等等，民主在起作用这个说法听起来是不是也有点太理想化了？毕竟花了5000万美元，这到底是民意的胜利还是资本的胜利？
确实有这个争议。
而且对话里还提到了一个更微妙的事儿，就是给白宫的新宴会厅捐款。摩根大通的杰米·戴蒙就说过，他们公司对这种事儿特别谨慎，生怕被人看作是在花钱买好处。这其实就是在敲警钟。
是的，这里就体现出芬克和阿姆斯特朗的不同风格了。芬克的立场和戴蒙几乎一模一样，非常老道。
怎么说？
他强调贝莱德的政治捐款在两党之间是绝对平均分配的，而且时刻保持警惕，绝不越界。
很谨慎。
非常谨慎。但阿姆斯特朗的逻辑是另一套，他把两件事分得很开。公司的游说是为了行业发展和保护用户，这是商业行为。而作为一家美国公司，为白宫宴会厅这种国家纪念项目捐款是公民责任，这两者不应该混为一谈。你看，就为你提供了一个特别好的窗口，去观察这些巨头们是如何在华盛顿这个复杂的政治生态里，小心翼翼的一边开疆吐土，一边避免踩雷的。
好，聊完了这些现实的博弈，我们来看看未来。对话里最让我兴奋的是芬克谈到代币化的时候
tokenization。
对，他直言不讳地说，现在所有人都在聊 AI。但大家对技术将如何彻底颠覆金融服务的讨论还远远不够。他认为真正的革命在这里。
那到底什么是代币化？我们可以用一个简单的比喻来理解。
好，
想象一下，你名下的所有资产，你的房子房本，你持有的股票，你买的债券，全部都变成像微信钱包里的零钱一样的数字凭证，也就是代币。
那意味着什么？
意味着这些资产的交易可以像发个微信红包一样瞬间完成，而且几乎没有中间费用。它将彻底铲除现有金融体系里那些冗长昂贵的中间环节。
芬克举的那个例子特别有说服力。他说，现在全球的数字钱包里趴着超过4万亿美元的稳定币，
一笔巨款。
这笔巨款如果想去买股票或者房产怎么办？对不起，你得先把它从数字钱包提现到传统银行账户，经过一堆复杂的手续和审核，才能进入传统市场。
这个过程就像在两个国家之间运黄金，既慢又贵。
对，而代币化就是要扎开这两个世界之间的墙，让资本实现无缝流动。
这听起来就像是要革传统银行的命，
可不是吗？
阿姆斯特朗的预测更直接。他说，银行现在就站在一个十字路口，要么拥抱这项技术，把稳定币和代币化变成自己的新业务，要么就等着被时代淘汰。他说，那些最顶尖的银行家已经看明白了，他们不是在抵制，而是在悄悄布局，想把这块未来的大蛋糕抓在自己手里。
更有意思的是，芬克把这个问题的格局一下子拉高了。他担心的不只是花旗银行或者摩根大通的未来，他担心的是美国的未来。
上升到国家层面了。
对，他警告说，美国在这个领域的行动实在太慢了。像巴西、印度这些国家正在进行全面的数字经济转型，在某些方面甚至已经跑在了美国前面。他认为，如果美国不在金融的数字化和代币化上赶紧追，未来就可能丢掉全球金融体系的领导地位。
你看，这就从一场关于新技术的讨论，变成了一场关于国家竞争力的大国博弈。这提醒我们，今天我们聊的这些东西，绝不只是少数极客的玩具，它正在重塑全球的权力格局。
而且，一旦你理解了代币化这个核心概念，你就会发现它像一把钥匙，能解开很多其他的锁。 比如公司治理。
公司治理，
对，阿姆斯朗不是把 Coinbase 的注册地从特拉华州搬到了德克萨斯州吗？理由是特拉华的法院对创始人越来越不友好了。
有这个事儿。
芬克马上就接话了，他说：“你先别急着搬家，想想代币化。如果未来所有股票都代币化了，我们就能在任何1秒钟准确知道每一股股票在谁手里。”
这就引出了一个颠覆性的想法：股东投票权的彻底民主化。
没错。
现在是怎么样的？大部分散户股东根本就不投票，投票权实际上被少数几个大型基金公司垄断了。
是这样。
但如果股票代币化了，未来每个持有者，哪怕你只有1股，都可以直接在手机 App 上对公司的重大决策投出自己的一票，这会让公司的管理层真正对每一个股东负责。
这场对话的结尾也特别有意思，像个彩蛋。他们聊到了一个很新的东西——预测市场。
预测市场。
阿姆斯朗还分享了他自己的一个恶作剧。他在一次财报电话会上故意念了一长串词，比如比特币、blockchain 什么的。
哈哈，为什么？
因为当时正有人在预测市场上压住他到底会不会说这些词。
这听起来像个玩笑，但背后是个非常严肃的议题。阿姆斯特朗认为，预测市场未来可能会成为一种比新闻媒体更准确的用来预测世界大事的工具。
他甚至提出了一个石破天惊的想法。
是什么？
他说，政府在推出一项新政策之前，是不是可以先在预测市场上跑一跑，看看市场认为这项政策成功的概率有多大？
哇哦，他这立刻就撞上了一个终极的伦理难题。
就是那个问题，对吧？
对，为了让预测尽可能准确，你是不是应该允许内幕交易？因为理论上，掌握内幕信息的人下注，才能让价格最真实的反映结果。
这问题太尖锐了。而芬克的反应，我觉得完美的总结了这2个人的不同。
他怎么看？
他对此的看法很保留。他说，我们贝莱德是努力在帮助人们规划未来30年的人生，而不是关心下1秒钟的赌局结果。
哇哦！
你看，这一下子就把2个人的格局和哲学给亮出来了。一个是着眼于长远未来的系统建设者，另一个是不断用新工具挑战系统边界的颠覆者。
是的，所以从这场对话里，我们看到了一幅正在剧烈变化的金融全景图。传统资本和新兴技术从一开始的尖锐对立，正在走向一种复杂又秒位的融合。而代币化很可能就是引爆下一场革命的导火索。这一切的背后是看不见的政治博弈和深刻的社会观念变迁。
没错，芬克在最后其实也留下了一个关于未来的宏大问题。他说，当 AI 开始大规模替代白领工作时，我们这整个为了培养白领而建立起来的大学教育体系，是不是也该推倒重来了？
是个好问题。
而阿姆斯坦则通过预测市场的讨论，把那个关于信息效率和公平之间的永恒矛盾赤裸裸地摆在了我们面前。
所以，今天我们想留给你思考的问题是，当技术正在一种我们前所未见的速度野蛮地冲垮金融、政治和社会的旧有边界时，我们需要建立怎样的新边界？而这一次决定这些新规则的又该是谁呢？
Please welcome Andrew Ross Sorkin and his guests, CEO of Coinbase, Brian Armstrong, and Chairman and CEO of BlackRock, Larry Fink.
Good morning again, everybody. I wanted to try to bring together this morning 2 pioneers from 2 different generations, dare I say, to talk about the future of finance at a time when we are going through a remarkable shift in all of it, from the passing of the Genius Act to the surge of stablecoins, prediction markets, now talk of tokenization, as well as where we are in our economy. And Larry Fink, of course, founded BlackRock back in 1988. Today, it's the world's largest asset manager, overseeing $13.5 trillion. That's with a T, if you can believe it. Brian Armstrong founded Coinbase in 2012. Today, it is the largest crypto exchange in the U.S. and has grand ambitions to do much more. In 2021, it became the first crypto company to go public and has $500 billion in assets on its platform. So good morning to both of you. One of the reasons I wanted to put you together is you historically, over the years, did not agree with each other at all about this world of crypto, if I dare say. You obviously were a proponent from the beginning. I think we met about a year or two after you began this effort. Larry, you were, though, on the other end of it, even on this stage in the past. You famously, in 2017, called crypto an index for money laundering. BlackRock...
And thieves.
And thieves.
Yes.
Money laundering and thieves.
Right.
You now have the biggest Bitcoin ETF. So what happened here?
You know, as the secretary said, you got to evolve and change. So, so I did say that. I think I said that in Washington, sitting next to Jamie Dimon. But during COVID, when we had a little more time on your hand, we weren't traveling around the world, I actually took it upon myself to visit and talk to a lot of people who were advocates of it. I wanted to understand, what am I missing? Why do I have that belief? And so as I was testing myself like I do in many other things, and around 2021, 22, I began to evolve those views. Those statements was not about crypto. Those statements were specifically about Bitcoin. So let me be clear too. But I see a big, large use case for Bitcoin, and I still do today. And so, you know, this is one thing that I get excited about. I have very strong views, but that doesn't mean I'm not wrong. But by having strong views, you have to test yourself and ask yourself. And, you know, in my role, I see, you know, thousands of clients a year. I have, you know, governmental leaders, and we have these conversations, and my thought process always evolves. And this is a very glaring public example of a big shift in my opinions.
How much, though, and Brian, you can speak to this, do you think that folks in the legacy or traditional industry didn't either get it, want to promote it, want to be part of it because they were scared?
Yeah, well, this is the classic innovator's dilemma, right? Anytime you have a new technology come around, everybody who's an incumbent has to decide, do we want to embrace it or do we want to fight against it? And in some of these larger organizations, it's kind of funny, actually, because there'll be a part of the organization, like their lobbying team in D.C., is actually fighting against it, kind of trying to do regulatory capture. But the innovation arm of the company is actually embracing it. And for many of the largest banks now, we're actually powering, you know, pilots with them doing stable coins and custody and trading and these kinds of things. And once in a while, we run into their lobbyists in D.C., and they're kind of trying to curtail it. And so, you know, I think it's like any company. You have to embrace change and be on the frontier. It's not unique to crypto.
Is there any chance in your mind at all that Warren Buffett is right? He and Charlie Munger used to call it rat poison and say, eventually it'll go to zero. It just might take a while.
But they're talking specifically about Bitcoin.
They're talking about Bitcoin. But you offer a Bitcoin ETF, so you can speak to this.
Yeah, there's no chance that I don't think that's going to happen at this point. I mean, you know, there's something that happens from a psychology point of view as we all age, and, you know, we grew up in a certain environment and we're shaped by the experiences we had. And I think for Charlie and Warren, they grew up in an environment of America preeminence, and the dollar was everything, and how dare you question it. And, you know, we're in a world now where democracies around the world are trying to figure out how to curb deficit spending. And, you know, Bitcoin is kind of this new digital gold. People are going to it in times of uncertainty. And so it's tough for them to contemplate a world that is more decentralized and running on the internet.
How much of it, though, in terms of what's happening in the last year, is a function of money being spent? You mentioned lobbying in Washington. So you were behind the political movement that really pushed a lot of this. I mean, directly. You spent about $50 million in corporate donations in the 2024 cycle. The crypto industry spent about $130 million. How much of it do you think is here now because the industry effectively, and some people cynically would say, bought this new opportunity?
Yeah, well, our mission is to increase economic freedom in the world, and I prefer to do that just with our products and integrating crypto into the traditional financial system to update it. But it turns out over time that a big way we can accomplish our mission is actually, you know, holding bad government accountable, right? So if there's 52 million Americans who have used crypto and they want to see clear rules on the books to protect consumers, I think in the last administration we saw that our representatives in government were not actually fulfilling those values that the American people had. They were actually unlawfully trying to kill the industry. A lot of it went offshore as a result of that, and a lot of consumers got harmed. And so we've always been very transparent about donations we've made to super PACs like Fairshake, but we also helped bring together a large number of voters to elect pro-crypto candidates. And to me, that's democracy working.
I think we need to get back to what is the purpose. What is the purpose of Bitcoin? Then we get into stablecoin. The $13.5 trillion that BlackRock managed on behalf of our clients, it's basically managing hope. That's all it is. I mean, why would anybody invest in a 30-year outcome unless you're hopeful in 30 years you have the compounding effect? Bitcoin is an asset of fear. And when you're less fearful, like we had a trade agreement with China, you saw a shift downward. There is conversations this week that there may be some type of settlement in Ukraine. Bitcoin fell a little bit. So you own Bitcoin because you're frightened of your physical security. You own it because you're frightened of your financial security. The long-term fundamental reason you own it because of the debasement of financial assets because of deficits. And so to me, even the movement in the last week, and we've had a 20-25% drawdown, and this is the third time since IBIT was created, our ETF. And so you see these shifts, and they're actually pretty non-correlated shifts, and so the role.
But then some people say, is that really insurance, right? If you had bought it at $125,000 and it's now sitting at $90,000, you're saying to yourself.
If you bought it for a trade, it's a very volatile asset. You're going to have to be really good at market timing, which most people aren't. If you're buying it as a hedge against all your hope, then it has a meaningful impact on a portfolio. The other big problem of Bitcoin is it is still heavily influenced by leveraged players.
That's what I wanted to talk to you guys about.
Okay,
actually.
I mean, that's Bitcoin. But we can see, because we see where the flows are coming from, we're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s.
Right.
That's fine. And they're establishing a longer position. And you own it over years. This is not a trade. You own it for a purpose. But the market is heavily leveraged, and that's why you're going to have more volatility.
Okay, so Brian, let's talk about that, though, the leverage piece, because I think we all don't know where all the leverage lies. I think some people look, Michael Saylor has a company strategy, formerly MicroStrategy. That seems like a big levered bet. He owns about 3%, I believe, of all the Bitcoin that exists. How much leverage is there really?
Well, yeah, I mean, we saw a little bit of this on October 10th this year, and there was quite a bit of leverage that got unwound as the market moved around a little bit. But this largely happened on offshore exchanges, right? On Coinbase, we saw very little of this. And to me, it's just an example of why we need clear rules on the books in the United States. I think 2025 is actually, we'll look back on this as the year that crypto regulation went from kind of gray market to well-lit establishment, because we saw the passage of the Genius Act, which was huge for stablecoins. We've now seen a bipartisan vote for the market structure legislation in the House, and now it's going through the Senate. And so hopefully within a few months, we might get a vote on that in the Senate. And then I think we'll have the foundation to really have this industry be built in the U.S., and we'll see a little bit less of this kind of leverage or high-risk activity happening offshore.
I want to get to stablecoins and tokenization and blockchain and where this all goes. But you mentioned lobbying before, and I just want to ask you one lobbying-related question. And actually, it can go to both of you because you're both doing something similar, which is that you've both made donations to the new ballroom that the White House is creating. We were just talking to the Treasury Secretary earlier about David Ellison making movies and trying to placate the administration, if that's what he's doing. I want to read you what Jamie Dimon said about making donations in this context, because he says that he's not doing it. And he says we have an issue, which is anything we do, since we do a lot of contracts with governments here and around the world, we have to be very careful about how anything is perceived and also how the next DOJ is going to deal with it. Mm-hmm. So we're very quite conscious of the risks we bear by doing anything that looks like buying favors or anything like that. So what do you think about that?
I agree with what Jamie said, and everything we do is with that type of lens.
Right.
typically our political giving is split between 50% one party and 50% one. How we distribute it, that is up to my public policy team, but we're very deliberate on it. We try to be equal in every category, in every case, but we are very deliberate, and we look through the lens that how he described.
Right. But Brian, what do you think of that? Because I think there is a view that people are trying to buy influence in Washington and that it's more available to buy today than it used to be.
Yeah, so I think these are really two separate things. On the one hand, we're an American company. We're proud to be an American company, so we donate to various things like national monuments and milestones, and it is bipartisan, in the way that Larry described. Separately, we heavily engage in lobbying. I mentioned to you this standwithcrypto.org and like Fairshake and all these kinds of efforts. And so those two are separate in my mind, but both important. Like, we're proud to be an American company.
And do you ever worry, to this Jamie Dimon point, that somehow, the Democrats will get into office next time around, or maybe even after that, and then say, you know what, we think that all of these donations were part of some kind of quid pro quo or some kind of influencing
Does
campaign.
that mean they're not going to use the ballroom then?
I don't know.
Yeah.
But
it's always possible. These agencies can get politicized.
Right.
They seem to always get politicized, so anything's possible, but that shouldn't stop us from doing the right thing.
It comes down to the ethics of an organization and making sure you're looking at the entirety of what you're doing in a balanced and fair way through the lens over time.
Right. Okay, let me ask you a different question, Larry, because you just wrote a piece in The Economist about tokenization. And I think that tokenization, some people here will know it well, some people will not, so maybe you can help level set. But I think you have a view that tokenization is effectively going to change finance forever.
Yeah. Want to explain?
Explain.
Okay. There's so much conversation going on about AI and how AI is going to be reshaping the world. There's not enough conversation about how technology is going to be reshaping the financial services area too, and the need for democratization, as Secretary Besson talked about, the democratization of investing in America. There are slews of middlemen in the whole financial services area. We have elongated settlements, elongated processes. If we could digitize every asset, so if we could digitize all stocks and bonds and have it more seamless going from a digital wallet of cash or stable coin into equities or bonds through, in most categories, through an ETF, it will reduce the friction costs, the transaction costs, and it allows a much more free flow. So there's $4.1 trillion of money in digital wallets globally, sitting in stable coins mostly. And can you now, and right now, if they wanted to go into a bond or stock or have a real estate transaction, they have to take the money out of the digital wallet into a traditional wallet and have all those commissions and fees and all that stuff. So the whole idea of tokenization of all assets, including real estate ultimately, is to just reduce huge friction costs, making investing easier, simpler. You could, as the Secretary was talking about this one account, you could do this all through your app, and it's going to allow a more, I would say, a free-flowing process of investing.
Brian, if all of this happens, how does the finance industry change? Would you short all the credit card companies, for example? Because invariably...
That's the digitization of a dollar.
Well, that's the digitization. We can also get into stablecoins, which is the other piece of this, which is in some cases required for all of this. We didn't really talk to the Treasury Secretary about it, but underlying all of this has to be lots of treasuries, which a lot of the banks, one of the reasons I think banks have been frustrated or anxious about some of this has been the idea that there's going to be a flight of capital effectively out of the banks that's going to go to effectively support the stablecoin business, which ultimately will support in large part some of the transactional issues and potentially even some of the tokenization projects.
Well, in that case, I think that's just the banks trying to protect their profit margin. They should have to pay rewards and higher rates to their own customers. And I think they're trying to put their thumb on the scale of regulatory capture, essentially, to prevent crypto from doing that. But my prediction is actually the banks are going to start, we're already seeing this actually, they're going to be increasingly embracing stablecoins. And my guess is that in a year or two, they'll come back and say, actually, we want to be able to pay interest and yield on stablecoins in our own companies. And so it goes back to that innovator's dilemma situation. I mean, the best banks are leaning into this as an opportunity, and the ones who are fighting it are going to get left behind.
I would say as a country, we're late.
We're late.
Yeah.
We're late. So
Who's ahead of us?
India and Brazil. So this is the biggest issue. We are a successful nation. So much of the foundation of our success has been the role of the capital markets. And this, if you think about how the U.S. economy was able to restabilize itself faster after the great financial recession, is because of the role of the capital markets. Now, the Secretary was talking about the role of private credit, but it was really the capital markets. And we are now starting to see in Brazil and in India a whole transformation of a digital economy. And they've digitized their currency. Now, you even have now credit card purchases on the pipe in Brazil itself, the PIX. And so what I am worried about, we're not moving fast enough. And, and so I didn't put this in the article because, I didn't want to be that vivid on this. But this is one of my big fundamental issues. We need to move faster. We need to move faster as a country, even in AI. I mean, you haven't asked the question. When people say, is there an AI bubble? I ask, well, if we don't continue to spend on this, and that means we're going to have some failures and some success stories, but if we don't spend enough faster in AI and digitization and tokenization, other countries are going to beat us.
So you think, by the way, I'll ask the AI question then. Do you think we're in an AI bubble, and do you think the economics of this are all going to make sense? If we were sitting here all together 5 years from now, will we say that we vastly overspent?
Look, a number of the hyperscaler CEOs, and I've had this various conversation, they're not certain if they're overspending or underspending right now, but that what they're certain is and they're seeing it right now, most hyperscalers are short compute. There's not enough happening, the amount of demand for this.
Right.
That being said, the timing of this build-out may underperform their investment criteria, but they're certain that the demand will be there. This is why I love a capitalistic market. I'm not here to suggest there's not going to be some, headline blow-ups. I mean, there are going to be some huge winners and huge failures. I mean, it gets to this economy. Right. But I would say there are going to be just incredible winners. And I've raised this question with politicians. Does that mean we're going to have $5, $10 trillion companies? What does that mean societal? How are we making sure? This is why I love the new children's account, because how do we broaden the economy if these hyperscalers are these massive winners?
Brian, let me connect this back to tokenization, because one of the things that we're seeing is there's an effort now to tokenize private companies, a lot of private companies in the AI space that are not public. They don't have the same disclosures that you have, but people are going to eventually get access to some of this stuff. And some of this might ultimately, by the way, end up, right, you're looking at me askance, Larry Fink.
Yeah, I haven't heard this one.
You haven't heard this one?
No.
There's a bunch of companies that are now being, Robinhood and others have tried to, are effectively trying to tokenize private companies so that you could sell pieces of those private companies to the public without the same disclosures. Mm-hmm. What do you think about that?
Well, in that case, I think they had some footfalls because you have to do it with the permission of the company, right? So I don't think that approach worked very well for them. But if you just zoom out for a minute and say, okay, these companies are staying private longer, right? Sarbanes-Oxley and all these things made it more difficult to go public. The amount of demand for capital in these private companies is just going to keep growing and growing. And there's so much money in crypto. How can crypto update capital formation just like it's updated every other part of the financial services area? So there's a big investment that we're making in how to update how to update capital formation and make it easier for private companies to raise money, but we want to do it with the permission of those companies.
Ultimately, do you want to compete with Larry? Do you guys think that you're competing with each other? Because you've talked about broadening your offerings far beyond crypto.
No, I don't think so. In fact, we're a great partner of theirs on their ETF.
Right.
We're powering, I think, more than 80% of the ETFs for crypto in terms of custody and trading. And as there's an effort to tokenize their funds, Coinbase is well positioned to be the leader in just tokenization of every asset. I mean, we've done that with stablecoins. You can look at it happening now in various parts of the world with stocks. It should be happening with every fund. And what we want to do is actually market their products to our customers, that the $500 billion of assets that you mentioned for retail and institutional. We want to put those products in front of our customers. So I think we'll work well together.
You mentioned IPOs and governance issues. I wanted to ask you a governance question. You are moving your company from Delaware to Texas. Mm-hmm. You are following Elon Musk, effectively.
And lots of companies, yeah.
Tell us why. And do you think that this is, and this is interesting to me because Larry, on the other end, I don't know if you think you're on the other end, historically has represented shareholders who want to have access to vote for things, and the shareholder is going to have less access to vote for things, likely in Texas.
Yeah, well, we want to run our company in a business-friendly jurisdiction. I mean, it's pretty simple, right? I think Delaware historically had a great monopoly on this, and they had a lot of trust in the courts and everything. But recently we've seen really unpredictable outcomes from the court. We've seen hostility toward founder-led companies, and they're not deferring to the judgment of these boards. And I think even on your show, Andrew, the governor of Delaware came on and kind of made dismissive comments about one of the leading entrepreneurs of our time. And so that was a bit of a head-scratcher for me. I mean, how are you going to have people come incorporate in your state if you have this anti-business rhetoric, right? So luckily, the founding fathers in the United States had this brilliant idea called federalism, where we have a free market competition amongst the states. Right. And we had some meetings with the folks in Delaware. I think the legislature was doing a good job trying to fix some of the court outcomes. But ultimately, if you want to get reform, you don't try to just use your voice internally. You have to leave and align incentives and punish bad behavior. Otherwise, they're not going to reform themselves. So we're happy to be in Texas, and they seem very business friendly, and
But when you say business friendly, shareholder friendly, or you're saying founder friendly, is what you're saying?
I think both. Yeah, I mean, it's business friendly in the sense that you can just get things done quickly. They're not going to allow somebody who owns one share of stock of your company to rack up hundreds of millions of dollars of legal fees. So I think it's business friendly. I think ultimately people can choose which company they want to invest in. Like the free market is the right regulator of that. We don't want unpredictable outcomes from courts that are doing activist
Larry,
activity.
you like Texas? You want to move to Texas?
I mean, we were one of the original founding investors in the Texas Stock Exchange, unrelated to this topic. But I want to just link back to, yes, we're responsible for all our clients' equity investments, and we've offered the right of each of our clients to vote their own shares. But let's just get back to tokenization. If we were able to tokenize every stock, we would know instantaneous the asset owner of record. So I would be transacting the trade on behalf of that owner of record. If we tokenize, we ultimately democratize everything related to voting. Every holder of the asset will have the ability to vote.
Right, but the argument always has been that most retail investors don't vote. And as a result of that...
But if it was on an app on a phone now that it is so easy and clear, it can't, technology can help that education.
Okay, but then the question is, if you're running a company, by the way, you're the CEO of a company too that also represents shareholders, is that a good, I mean, if every quarter you have, or every year rather, you're fighting proxy battles every year as it is. Right. But if the democracy gets even larger, meaning if everybody, and then you're going to be having to run massive campaigns every year.
No, but I think the SEC is also trying to clarify proxy access. So that Paul Atkins did already said this is going to be one of his big.
Well, but one of the things that we've heard that the president wanted to potentially sign an executive order that would actually prevent big funds like a BlackRock or a State Street or any of your competitors effectively from voting those shares on behalf of
I
shareholders.
heard that rumor too.
Yeah. And
so
what do you
let's
think
be
of
clear.
that?
If that became a rule, if that became an executive order, that means foreigners will have more power voting in the United States.
Say that again?
If they disallowed index funds to vote at this moment, it means foreign investors would have a greater percent of the vote. Is that an outcome that we want? Two, it would put much more power with the activists investing. I can tell you almost every CEO who approaches BlackRock of this is frightened of that outcome. Because if the index investors own 30%, 40% of the shares, You take that out, it really will create very skewed outcomes. And foreigners will have a bigger role in the voting process, as will activists. Is that the outcome? You want to see instability at the corporate level if that happened. I mean, last year we voted 98.8 with management, and there's only a few instances where you vote against. And so, and as I said, if we get back to tokenization, which we're excited about, every asset owner of record of that moment will be the ultimate voter of record.
We've only got about a minute and a half left, and I have two questions for you. One is just, and so 30 seconds each. Where do you think we are in the economy right now? If we were back here a year or two from now, would we be in a materially better place? How do you see the markets?
Want to go first? I mean, I'm an optimist, right? I think that it's kind of a golden age for freedom that's happening with, democratization of access to these different products with crypto. We're seeing prediction markets really start to flourish. We have regulatory clarity now for stablecoins. We're seeing it emerging, hopefully, for market structure. And the U.S. feels like it's back on offense. We have a chance to go update the financial system with crypto and just get a lot of the friction out of the economy. Going into the midterms, who knows? Maybe the government will want to juice the markets, do some more rate cuts. So I'm generally optimistic, and we try not to get caught up in any short-term trends. We just try to build good products and play for the long term.
Larry, what do you say?
So managing the large, 40-something% of our assets are foreign-owned assets. Both, they have a 70 to 80% allocation of their portfolio in dollar-based assets. This is the place where they want to invest in the opportunity. We obviously earlier this year we saw maybe a 3 or 4% reduction, but they're still heavily overweighted. And so I think that is one of the great powers that there are very few destinations where capital is seeking long-term opportunities. That being said, we have to ask the question, why is the job market in 2025 so anemic? Last year, the job market averaged 154,000 new jobs every month. This year, we're averaging 31,000 jobs. That's not part of the conversation. The question is it the uncertainty around all the policies that are being created? If that's the case, when there's more certainty, are we going to see a surge in job growth next year? Well, that's an inflationary outcome. The counterpart is, are we seeing this anemic job market because the futures today, we're now beginning to see more labor substitution because of technology. That's a very deflationary outcome, but that has a profound impact on how we navigate.
Which one do you think it is?
I think it's both, but I think the trend of technology, you're starting to see that. If you look at corporate margins, especially the leaders in every industry, are winning more and more share. So we are seeing this K economy developed in every industry. And what I think is happening is more and more companies are doing more with the same amount of people or less people. I mean, if you think about the ratio I think about BlackRock, our revenues are up 40%, our headcount's up 5%. Okay, so our margins are up about 300 basis points over the last few years. And so with technology, you're able to, transact more volume, more business. You have more technology doing much more of the fundamental, the backbones of what we do as a firm. I mean, having $13.5 trillion, we do a lot of trades, and we have thousands and thousands of different criteria that each investor gave it. And it is all done through technology. And so this technological change is happening today, but it's going to have a profound impact on our economy. It's going to have the biggest impact is what do we do with our university system? We built a university system in the United States based on white-collar jobs. That's going to be changing with technology. How is that all going to be reshaped? We need to be answering these questions, and I don't hear people asking the questions.
They are important questions. Final question to you. You had a viral moment talking about the finality of at the end of your quarterly earnings call. We've been having discussions about poly market and prediction markets and everybody betting on what people are going to say at any given moment. And you read off the words that people were betting on the call. You said Bitcoin, Ethereum, blockchain, staking, Web3, tens of thousands of dollars had been bet on each of those words. People were betting on whether you would actually say those words, and then you effectively were trolling them, I think. Can you tell us? Tell me what you think about that and what you think about prediction markets if you can effectively determine the winner in such a way. And by the way, there's lots of folks who are now there are people in here. I heard that there were people making bets about what was going to happen at DealBook. CNN just made a contract with Kalshi, apparently, to have people bet on news. Mm-hmm. What were you thinking during the conference call?
Yeah, well, the conference call was me just having a little bit of fun. But I think the bigger picture here is that prediction markets are a big deal, and it's for 1% of people, they're trading it just like another asset class. But for 99% of people, they're looking at it as an alternative, I think, to traditional media, actually, to figure out what's going to happen in the world. And then some people are also just using it for entertainment, right? So it's a very interesting new area. I think that actually we're going to see even more potential here. Like an example would be policymakers could actually use prediction markets to say, okay, of these three policies, which one will raise GDP or which one will lower unemployment the most or whatever metric you're trying to get. And they can get signal from the market about which policy to actually go implement. So it's one more example of this trend of kind of taking.
Do you worry about manipulation? I mean, that's the other big part of it. And by the way, you effectively manipulated the outcome.
Yeah, well, I didn't trade on it, of course, but I actually had a really interesting conversation with one of the folks that was nominated to be CFTC commissioner about this, and he asked me, he said, do you think we should allow insider trading in prediction markets? And I said, it's actually it's not a clear-cut question, right? Because if your goal is to actually, for the 99% of people trying to get signal about what's going to happen in the world, like is the Suez Canal going to be reopened or whatever, you actually want insider trading. You want, some admiral sitting on a ship in the Suez Canal who has really good information to be trading so you get better, higher quality signal out of them, right? Now, if you want to preserve the integrity of those markets, maybe you don't want insider trading, right? So there might be like a decentralization test that has to go in here, but it's not a clear-cut answer.
Larry, I don't know what they're betting you're going to say, but you just sort of made a face.
We try to help people navigate a 30-year outcome. I don't really care about what happens the next moment. I mean, I'm aware in the betting market, in football, you could bet every play. I mean, to me, this is not how I'm going to live my life.
Larry Fink, Brian Armstrong, thank you both very, very much.
Thank you.
That's great. Thank you. That's great. Thank you.